what I was showing was the percent of token supply on exchanges for Fetch. It's been one of the few altcoins over the past couple months, particularly over the last month, that's been performing quite well, and actually had over a 100% gain here between just mid-November and its high about 3 or 4 days ago. And one of the reasons, or at least the telltale signs that this could have happened, was due to the rising percent of token supply on exchanges that was occurring over the past 6 months, despite the price declining, as all other altcoins kind of look like this between June and October. So what you can do is kind of keep an eye on these kinds of metrics. And if you see your favorite altcoins starting to have a rise in percent of token supply, despite its price declines, especially compared to other altcoins, that can be a very good sign that there's going to be some added token circulation and movement on that altcoin that could lead to some big rises like this. So Fetch was a great example of this, and something I wanted to highlight. The other thing I wanted to show on Fetch was the small ticks in mean age. What we tend to look for are sudden falls in mean dollar age and stack mean age, which show that there is a movement in some of the older tokens that are in wallets or that are invested in those particular tokens or dollars. And we want to see that these drops here are occurring on a fairly regular basis, as they especially were in the stack mean age stat. We don't see these in some other coins like Bitcoin and Ethereum have very few drops right now. But because of all of the movement of Fetch, circulation, and movement onto exchanges, we're seeing a lot more small dips like this. Overall, though, they're still pretty minor when it comes to the grand scheme of things. And we'll want to see more big drops in maximal mean age, not just in Fetch, but in other tokens, before we can be confident that Fetch will continue its pretty historic rise here. Any other questions on Fetch?
Yeah, it's interesting that the spike or the growth in percentage of coins on exchanges is actually correlated with the rally, because I've often found it to be the exact opposite, because as the amount of coins kind of flows into exchanges and creates a rise in sell pressure, we've oftentimes seen this be a precursor for a dump, and vice versa. I think I have an example that I'll share a bit later where there was a significant dip in Engines coin supply on exchanges a week before the rally started, as whales kind of started moving coins away from exchanges, maybe even to artificially deflate the supply. Definitely interesting either way.
Yeah, I think I would love to see those counterexamples, sure. But I think that oftentimes it's correlating. You want to look at what the performance is doing versus the direction of price. The decline of price, and then an increase, sort of an inverse correlation to that with exchange movement, that can be a sign of a turning point. I think whatever direction price is going, when you start seeing a lot of tokens move to an exchange, it's the sign of either capitulation in the positive direction or the negative direction.
Yeah, it definitely could be a sign of just a general paradigm shift on the market.
Mm-hmm. Mm-hmm. So yeah, it's very interesting, and I definitely want to keep an eye on this.
Mm-hmm.
I wanted to move on to basic attention token here as well, and show that same graph, because it's looked far different. In this case, basic attention token is kind of correlating exactly with price, and this is more along the lines of what I think a lot of altcoins are doing from what I've checked. They simply, there isn't any significant movement on tokens moving to exchanges, therefore it's kind of reflecting against what price does. And this typically is just a sign that there aren't any strong plans from traders to do something with large amounts of coins and large amounts of percentage of that total supply of any particular coin, I should say.
Yeah, so for example, if you look at this chart, right? So starting at October 2018, there's a sort of a downward slope of the percentage of the no from the from a downward sort of trend of token supply on exchanges, which is eventually turns into a rally where the coins once again start flowing towards exchanges as people want to take advantage of the rally, and the similar patterns appears from 2009, maybe July onwards. So yeah, that kind of
Right.
is a setup that I've often seen with coins, but the opposite can also be true, and I agree that in context of the general price movement, this sort of activity with exchange wallets can be indicative of one or the exact opposite thing.
Right. Yeah, the rule on basic volume trading, if you look at just basic transaction volume bars that you would see on any typical trading view chart or something like that, is if a price is moving one direction and volume is declining, that typically is a sign that there isn't enough volume to maintain that direction, and you're going to see a turn in direction at some point. If there's a rising rate of volume in a price's direction, it means that that price is more likely to continue. With movement onto exchanges, that's often a sign that volume is planning to be done. So it's almost this inverse correlation that I find really interesting. And I might actually do a study on how percent of token supply correlates with actual token circulation. Maybe study 5 to 10 different coins and see what kind of parallels there are versus inversions as prices are moving up and down.
Okay. Yeah. Sounds interesting.
Yeah. And we also have quite a bit of mean age movement here. See, these are actually a bit more drastic ticks down, especially in early 2019. We actually had a big tick down, but the price continued to decline, which is interesting. But it ended up being kind of a good leading indicator. In February, that's when Basic Attention Token was really starting to just churn along, and it actually went all the way from 10 cents to a peak of 44 cents. So about a 4.5 times rise is pretty impressive. And this one big tick down, which meant that the age of the dollars and the coin investments moved down pretty significantly from 45 weeks to 38 weeks, all in about that's pretty significant and something to look for as a foreshadow for a price rise. We actually just saw on December 9th our first big tick down in a while, and it's hard to see on this 2-year graph, but we are in the midst of a nice little 7% uptick as we speak right now, compared to Bitcoin and the rest of altcoins right now. So it's in the right direction, and mean age might have a lot to do with that. I also wanted to show this spike in average age consumed, which happened around that same time on December 9th. And this is typically a sign that there's going to be volume increases one way or the other. As of now, it looks like it's an increase in volume. We'll see if this lasts, because as we know, average age consumed in days can foreshadow a big movement in either direction. And we'll have to see how that plays out. And yeah, that's pretty much it for me, guys. But if there's any other questions, I'd be happy to show some more charts or anything else.
Cool. Thanks for all the data, Brian. And yeah, so for those wondering, so the most of the data that Brian has just presented lives on SandData or data.sentiment.net, which is available through sentiment.net/send-data, and you can find all the information as well as different pricing tiers for this product of ours. So I'll actually just finish up with a single example that I wanted to go over, showing several or uses of several of our metrics, in particular in the case of Engine. So this comes from a call that I had yesterday with a customer that is interested in Engine in particular. So we just looked at a various metrics for ENJ over the last 6 months or so, and we have found some quite interesting correlations and interesting chart setups one way or another, both as a bottom and top indicator. So let's start with this latest top, and we can kind of go over some of the more classic top indicators in our data and how it pretty much perfectly capture this end of this Engine rally. So first of all, you can see a spike in both daily active addresses and network growth right around the top of the Engine rally. So essentially what... Oh, can you not see me? It's probably because I did not share my screen. Yeah, that can happen sometimes. Sorry, guys. Between OBS and Google Meet, I sometimes forget which screen you guys are seeing and which you aren't. So once again, so we're looking at, can you see my screen now? Okay, so we're looking at the Engine coin and our metrics for it on SendData. Starting with this last rally for Engine, I wanted to go over some of the top indicators in our data that have kind of predicted that this downside or downtrend is going to occur pretty much immediately afterwards. So as mentioned, both daily active addresses and network growth has spiked immensely right around the top of the latest Engine rally. Essentially what this means is just an increase in on-chain activity as the crowd moves in, and you can see a lot of new addresses, 365 new addresses created on the Engine network. Pretty much, we can assume based on the context of the spike in on-chain activity that this is mostly due to speculative, activity and traders going into Engine to take advantage of the rally. But if we're not sure, what we can do is we can scroll all the way down and look at daily active deposits. So basically, this metric only takes a look at the active deposit addresses for a particular coin, and we can see a correlating spike in deposit addresses for Engine. It looks small, but it's actually 218 addresses here and 210 addresses here. These are addresses sending Engine to exchanges, spiking right around the very top, or actually just slightly before it. And there's a correlating spike in the deposits volume. So the actual amount of coins being moved to exchanges has been inflating as the rally has progressed. So this is in case that you're not really sure what a spike is about. You can go down and you kind of filter out by only the deposit addresses, which we sort of use as a proxy for speculative activity on the network. So this is the first kind of telltale sign that something is going to happen. And as soon as you see this sort of divergence in between on-chain activity and price trends, this has oftentimes proven to be a very effective top indicator. So when the crowd starts going away from the coin, there's a downtrend in on-chain activity. The price is very often just unable to sustain the rally, and signaling a forming top and impending correction. Another interesting sign that something was going to be amiss is the spike in token age consumed, in both token age consumed as well as the average age consumed in days. So what this means, this can just indicate general market volatility and instability on the network, depending on, similar to the percent of token on exchanges, depending on the context of this spike correlating to the current price trends. It can indicate both people moving into position or moving out of positions. But the spike on the token age consumed coin in particular show you when long time or passive so coins that have not moved in a very long time start moving once again. Which can be basically, long-term hodlers, maybe even ICO investors trying to take advantage of the rally. And it is these moves that can quite often adversely impact the market, which happened to be the case in this particular instance. There was a giant spike in transaction volume right around the top, and very similar to the daily active addresses as this spike sort of started to consolidate. back to pre-spike levels. We can see the interest, the crowd interest in the coin waning on-chain, which has also transformed or mirrored in the price movement of Engine as well. So just a few examples of how you can use our metrics, and pretty much, it has every single metric of ours has kind of correlated with this rising price and with a correlating dip. One other thing that I wanted to mention, however, is this particular dip, or these two particular dips in exchange funds flow. So, and this is exactly the point that I was making in terms of token supply on exchanges. When you see several dips or withdrawals of Engine from exchanges. So basically, the amount of Engine on exchanges was about 39.2%. It dropped down to 35% here, and then it dropped even more to 34%, which is kind of so almost 5% of the total circulating supply of Engine has moved away from exchanges in the last, let's say, month or so. So there's been definitely a decreasing supply of the coin on exchanges, which can very often, inflate the value of the coin. And there's been a decrease in the rise in general sell pressure as well. And we can even figure out who it was, whether this was fish or whales that were actually moving away their coins from exchanges, because that can provide us some additional insights. What we can do is we can look into our holder distribution metrics to see exactly who was in charge of or causing this move. So if we go to Engine and look at the top holders for Engine over the exact same time frame. So let's choose the top 100 addresses holding Engine and zoom into the last 6 months. So this particular chart shows the holdings of the top 100 wallets in terms of the percentage of the total supply of Engine. So looking at the non-exchange wallets, the biggest non-exchange whales for Engine, we can see two spikes, basically whale accumulation before the rally, correlating pretty much perfectly with these withdrawal volumes or dips in exchange funds flow. So this has been the biggest whales accumulating. So this it went from 39.9% of Engine's total circulating supply being held in these wallets to 43.6%, so an almost 3.7% rise, and then once again to 44.3% of Engine's total supply. And then we can see a opposite trend right around the top when whales sort of started preparing to exit their positions as well. And then if you look at what the conditions were like on exchanges, you can see the exact opposite trend. So, huge withdrawals of Engine from exchange wallets going down to just 30%, all the way down to 29.5% here. And then as the price of Engine started to rally, you can see coins flooding back to exchanges and sort of, signaling the top right around here. You can go into even more granular metrics as far as holder distribution is considered by looking at our, I think I clicked at it twice, by looking at our holder distribution metrics for Engine. So rather than just the top 100 coins, the top 100 wallets, here you can see pretty much all of the holder categories and how they have behaved in light of the recent Engine rally. So starting with the cumulative balances of very small holders or fish, you can see that they have been pretty much indiscriminately accumulating Engine throughout the rally, not really paying too much attention to the general market trends. However, just one sec. Now, when you start going to these big, when you start going to the big guys, so basically the top whales of Engine once again, so any address that has held between 1 million and 10 million Engine, we can see once again two spikes as whales started accumulating prior to the rally, and then two dips, one right around the top, and then one as the rest of the whales started sort of capitulating as the price started dropping. And then here we can see a huge increase in this last category of of engine holders, which is usually just exchanges. So these are addresses holding between 10 million and infinity engine coins. You can see a correlating spike, the biggest one in the last 6 months, right at the top of the engine's rally, basically meaning that pretty much all of the bigger holder categories have been moving or offloading their coins to an exchange. And you can double check all of this finding with our social data as well. So pretty much everything that I just shown you is related to on-chain analytics, but you can also go to Sandbase and look at engine social metrics. Let me go back to the light mode just so it's easier to see. And let's see what was happening with engine on around the time of the spike. And that's pretty much what Brian has shown in terms of Tezos as well. So a huge spike in social volume started right around the middle of the rally, I want to say, and then proceeded into the very top. And then as soon as the crowd stopped talking about engine and moved on to greater things, there has been a correlating dip in engine's price movement. I think we can also check if engine has shown up in our top social trends as well. And there it is, right there. So it first appeared in our top emerging trends, basically a list of ours where we keep track of the top 10 words that have gained the most social volume on crypto-related social media channels, basically the most developing stories. It has first appeared on this list here and last appeared right at the very top of its rally, basically meaning that the crowd started really talking about engine right around the middle of the rally, and it peaked right here. And then once the both on-chain and social activity started to decline or diverge from the price action, the price of engine was no longer able to sustain itself. So this is a few ways that you can kind of use both our on-chain and social metrics, juxtapose them to figure out where we are in the price action and price trends for a particular coin. In this case, it is engine. So just a few things that I wanted to show you. This, by the way, is Sandbase, app.sentiment.net, our flagship platform, which you can gain full access to for $50 a month, whereas our more advanced metrics on SandData can be accessed via 3 different plans depending on your needs. So unless anybody else has anything to add, I would call it a day, but I'll just give you guys a few minutes or maybe 30 seconds if anybody else wants to share something else for the crowd. Okay, I'll take that as a no. So with that, thank you everyone for participating in another installment of This Week in Crypto. If for any of you listening and wanting to join the discussion in one of the upcoming talks, please let us know at our Discord, whether you want to discuss a certain coin or a certain chart setup, whether you found something interesting on our charts or just want to join the discussion as we speak, let us know and we'll get you into these calls into next week's edition. So for now, that's it from us, and talk to you next week.
Appreciate it, Daniel.
Thank you. Bye.